You know, we're all a little obsessed with the future. But what if there was a way to predict it that's actually more accurate than any expert, any poll, or any pundit you see on TV? Well, that's the huge promise of a new multi-billion-dollar industry that's betting big on one simple idea.
So that really is the question, isn't it? Can cold, hard cash be a better crystal ball than the careful, scientific methods we've trusted for decades? Is a bet actually more powerful than a poll?
Okay, so what even are these things, these prediction markets? Well, just imagine a stock market. But instead of trading shares of a company like Apple, you're trading shares in an outcome. So if you're convinced a certain movie is going to win Best Picture, or you think inflation will drop by next quarter, you don't just post your opinion online, you actually buy a contract that pays out real money if you're right.
And look, don't think for a second this is just some niche corner of the internet. We're talking serious money here. One of the biggest players in the game, PolyMarket, is reportedly being looked at for a valuation of $10 billion. This isn't just gambling. It's a massive financial industry, and it's all built on one powerful belief. The crowd, when it has money on the line, knows best.
So what's the big deal? Why are so many really influential people, from tech venture capitalists to former Treasury secretaries, so convinced that these markets are a revolutionary new tool for seeing what's coming next?
Well, former Treasury Secretary Larry Summers, he really hits the nail on the head. It's all about having skin in the game. In a prediction market, you can't just spout off an opinion with no consequences. You have to back it up with your own cash. And that simple act, well, it forces a level of seriousness and calculation you just don't get in a casual conversation or when you're answering a simple survey.
So here's a way to think about it. It's like this giant decentralized brain. A prediction market instantly gathers a consensus from thousands and thousands of people. A candidate drops out of a race, boom, the market moves. A new economic report comes out, the odds shift just like that. It processes all this new info far faster and often way more accurately than any single expert ever could.
Okay, so that's the case for markets. But what about the very industry they claim they're going to disrupt? We're going to switch gears and hear the defense from a veteran pollster, Scott Rasmussen, who argues that, you know what, reports of Polling's death have been greatly exaggerated.
Rasmussen's whole argument, and this is really important, hinges on a distinction that most of us probably miss. He says we're confusing polling data with polling analysis. The raw data, the actual answers people give to the questions, that's often remarkably accurate. The controversy, he says, usually comes from how we interpret that data to try and predict what's going to happen.
Okay, let's talk about 2016, right? The go-to example for everyone who says the polls were wrong. But were they really? If you look at the national level, polls on average predicted Hillary Clinton would win the popular vote by about 3 percentage points. And the actual result? She won by 2 points. I mean, come on, that's not a massive failure. That's actually ridiculously close. The error wasn't really in the national data. It was in how that data was used to predict what would happen state by state.
So you see, the real puzzle for pollsters today isn't asking the right questions. The absolute hardest part, the million-dollar question, is figuring out who is actually going to bother to show up and vote. You can have a perfect sample of what the public thinks, but it's pretty much useless if you can't figure out who among them will actually cast a ballot on Election Day. So, where does that leave us? We've got the wisdom of the market on one side and the science of polling on the other. Are these two really rivals destined to fight it out for who gets to predict the future? Or is there another way to look at this whole thing? This next idea is probably the most important takeaway of this whole explainer. It's a fantastic analogy. Prediction markets don't replace polls any more than the stock market replaces corporate earnings forecasts. Just think about that for a second. The stock market doesn't create a company's financial data, it reacts to it. It needs those earnings reports to even function. So let's just break it down. Think of it like this. Polls, they're the data generators. They go out and create a snapshot of public opinion at one specific moment in time. Prediction markets, they're the data aggregators and analysts. They take that polling data, they mix it in with breaking news, with expert opinions, with everything else, and they spit out a live, constantly changing probability. One creates the raw material, and the other processes it. So when you boil it all down, this isn't really a story about one tool replacing another. It's about our toolkit for understanding the world getting bigger and way more powerful. We now have these incredible tools for generating data, and now we have these other amazing tools for analyzing it all in real time. The future of forecasting isn't about choosing one over the other. It's about knowing how they can and should work together. And that leaves all of us with a really big question, especially today. With prediction markets, with polls, with AI, all claiming they can see what's next, the new challenge isn't finding information, the challenge is knowing what to trust. In a world with literally infinite data, how are you going to decide?